Welcome to the Real Estate Investing Morning Show with your hosts, Wayne and Gabby.
Hello, good morning, everyone.
It's Friday, yeah.
It's Friday. I don't remember how the song goes.
That's a good, well, I'll mark that down as next time we go out for karaoke, Gabby is singing Rebecca Black.
Rebecca Black, yeah.
Good morning, real estate investors across Canada. Welcome to the Canadian Real Estate Investing Morning Show. I am your host, Wayne, and this is my wife, co-host.
Gabby.
What'd you say?
Gabby.
Did you say Yabby?
Gabby.
Yabby?
I might have been soft on the G.
You got that? You got the using the Y now. You got that Dukabor Russian thing going on. That's okay. You're German though, aren't you?
Yeah.
Yeah. All right. Well, thanks, Yabby. Today's show is all about the Edmonton real estate market. Very excited for this. As you guys know, this is the main market that Gabby and I, and I are
Kirsten
investing.
says Gabby.
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 Gab. Oh my God, that is gonna stick. That's gonna stick.
I did it to myself.
Hold that idea just for a second. But okay. I'll finish saying what I was saying. That's the market that we invest in. A majority of our investments are in Edmonton. We invest all across Alberta. And we have a special guest on the show today,
Yes.
Investor-focused realtor in Edmonton, Alberta. Calvin Hexter is on the show.
Yeah, I'm so excited. It's been a while. It's been longer than normal between speaking with him last, so I'm super excited to hear about the Edmonton market, what's going on. Obviously, we see like our own perspective, right?
Yep.
But it's nice to get Calvin in here and hear the actual stats and what the realtors are seeing.
From the perspective of a realtor,
yeah.
Yes. Obviously, we're real estate investors, not a realtor, but realtors get access to stats that we don't get. I mean, we could get access to it if we really wanted to look hard enough. Yeah. But they also see it from a different lens. You know, they're not just seeing it from the investor's perspective; they're seeing it from the home buyer's perspective, the seller's perspective. So we're going to get a lot of extra information and learn what's really going on across the real estate market on the residential side to find out what kind of opportunities are available. Mm-hmm. And we are, we're in May now, so we have the new stats from April 2026 to see what's going on with the spring/summer market. And how is it started off?
Yes.
Right?
Yeah.
What kind of, how many listings have been put up and how many, listings are being sold, right? How many of them are
quickly they're going. Yeah.
Consumed. So very excited for that. And you'll be able to see Calvin and some of his team tomorrow at the REI Masters Edmonton Real Estate Investing Bus Tour.
Oh my God.
Yep, that is tomorrow.
Wow.
Get ready. It's going to be a lot of fun and very, very, very informative. We got some really cool stuff. If you want to know what the best opportunities are in Edmonton right now, that's the place you got to be. And if you don't have your tickets, well, tough titty, said the kitty.
But the milk's still good.
It is sold out. Sold out.
If you are registered, you'll be hearing from us this morning as well with some more details.
Mm-hmm. Yep, you'll be getting the final details there.
Watch your emails.
That full day event, it's gonna be a blast. Yeah. What's the weather looking like tomorrow?
You know what? It's actually, I don't think it's supposed to be the nicest weather this weekend, but I'm down for that. I'm down for a cooler. When it's hot and you're out and you're on the bus and all that kind of stuff, you get all sweaty. It's, I'm down for a bit of a cooler day. So.
Yeah. Okay.
I haven't checked in the last few days though, so I don't know if that's changed. Hopefully it's not pouring rain.
Okay. Yeah. Cause like one of the stops is
a construction site.
Yeah. So that's going to suck.
Yeah. Here, we'll see. We don't have the weather girl with us today, so.
And also, the lunch / majority of the networking is outside.
Oh, really? Okay.
Yeah.
Well, we'll have to double check on that.
Son of a gun. But yeah, how many of you that are live here today are going to be there? Let us know in the chat if you're joining us live on YouTube. I have a request. When you see Gabby tomorrow, I want you to go, Gabby!
Hey, Gabby.
Nori's coming all the way
so
from
excited to meet Nori in person.
from Vancouver. He's going to be coming in and joining us. That's exciting.
Yeah.
I see Nori's here in the chat.
Yeah. So it's gonna be 7 degrees and cloudy. I don't see any rain.
What the? Are you kidding me? Are you kidding me right now? 7 degrees and cloudy?
Yeah. We will survive.
I was actually quite convinced that I was going to be overheating, and I was trying to figure out like t-shirts, you know what I mean? Like, wow, okay, well that won't be a problem. We're going to be wearing jackets tomorrow.
Yeah.
Interesting.
Yeah.
Very interesting. Okay, cool. But yeah, that's tomorrow. We're going to be touring 3 of the best investment property opportunities right now, strategies in Edmonton, and I am so incredibly excited. We're going to be finally showcasing our new garden suite project, which everybody's been anxiously waiting for. Mm-hmm. I revealed a little bit more information at the area meetup and presentation I did on Wednesday night. Talking about that. So if you missed that, again, tough titty said the kitty. You guys start showing up for shit, guys, if you want to learn about stuff. I'm not going to reveal everything on the podcast. But those that are going to be coming to the Edmonton Real Estate Investing Bus Tour, hosted by REI Masters, on Saturday, they're going to get to see one for the first time, first of its kind in Canada.
Mm-hmm. Yeah.
Wait till you
Pretty
see
exciting.
it. Wait till you see it. Okay, so who do we got joining us on YouTube this morning? It looks a little freaking quiet. What's going on? Everybody sleep in? Is it a holiday?
Well,
Is it a holiday?
I think that it's not a holiday, but I think most of the kids are off school, or all of the kids are off school. They usually extend the long weekend by a day.
Way.
Yeah. So yeah, I know that lots of Evie's friends are off school today. So I don't
Really?
know. Are we giving her the day off?
No.
But Kirsten's here with us this morning. She says good morning, and Diane has Diane been joining us on YouTube?
I don't think Diane's joined us on
been
YouTube
joining
yet.
us. I think this might be her first time in. If not, I'm sorry, but you need to communicate with us on YouTube for us to see that you're here. So, yeah, and Nori, of course, is here. Says he's excited for the bus tour tomorrow.
You can't see anyone else, eh? You
No.
can only see the chat. Okay.
Yeah.
I can see more, but I don't want to start flipping around my screen too
Yeah.
much. But thank you so much for being here. And thank you to everybody who's subscribed to the show. You know,
You crossed a threshold.
I crossed a threshold yesterday. I put a post about it yesterday that we had 999 subscribers to the YouTube channel. And I said, who wants to be number 1,000? And I didn't get a screenshot. I don't know who is the 1,000th, but we're over 1,000 subscribers now. If you're not subscribed on YouTube, go look up Wayne Hillier and subscribe. And that's where we host the Canadian Real Estate Investing Morning Show live every morning at 7 a.m. Mountain Time. Go subscribe, and then you get notified at 7 a.m. when we're live, and you could be a part of the conversation with us. You can have a coffee with us. Any questions you have, you can put them in the chat. We'll answer them. We provide free coaching for real estate investors all across Canada every weekday morning. Even today, when we got a special guest on the show, Calvin Hexter, you can ask any questions. You can put them in the chat, and you can ask Calvin questions on what he's seeing in the market. So it's a tremendous opportunity to get free coaching. Take full advantage of it. But yes, thank you so much to everybody that subscribed. It's kind of cool to go across 1,000. You want to know one of the coolest things? I needed to cross 1,000 so that I could start monetizing this channel.
Oh.
So now I'm going to start getting paid for you fuckers.
Oh, okay. You have to tell me about that after.
That was a threshold that I needed to cross. I'm like, God damn it, you could just get. So now I'm going to start making pennies every time you watch a video.
Okay.
Yeah.
So now we're going to be those big YouTube, make a career out of this. Eh?
Yeah.
Eh?
Tune in on Monday. We're going to be doing an unboxing of my new slime that I picked up online.
No. We're going to order like 50 squishies, and we're going to unbox the squishies and show you the ASMR of them.
Yeah. A big shout out to slimedaddies.com. Get your, if you're a daddy and you love slime, go to slimedaddies.com.
Okay.
Sponsorship opportunities.
Yes.
Okay. Yes. But anyways, we're very excited for today. We're very excited to talk about the Edmonton real estate market. That is where we've been investing for over 15 years. I mean, it is the best real estate market in Canada. It's been the best. There have been other markets that have had their day and had their moments, where there's been some crazy appreciation. But even during those times, I still wasn't investing anywhere else other than Edmonton because of one big, very, very important thing that Edmonton has that most markets doesn't. One big one. Do you know what it is?
Is it Calvin?
It starts with a C. Okay, it does start with a C. The second letter, C-A. You still think it's Calvin, don't you?
L.
It's not C-A-L.
Cash flow.
It's cash flow. Cash flow is so incredibly important.
Yes.
If you're investing in real estate, cash flow is your risk mitigator. It is. You could have a great market where there's lots of appreciation. You could have, great ROI, but at the end of the day, and we invest in real estate for the long term, right? And during that period where there's while we're holding that property and operating this business, we're going to have good years and we're going to have bad years, and then we're going to have good years, and then we'll have really, really good years and then we'll have really, really bad years. But it goes up and it goes down in between the real estate market and the rental market. But the rental market specifically, we want to know that while we're holding this asset, waiting for it to do its thing, to go up in value, we want to know that we can hold this property. That the rent coming in is covering the expenses, so that we're never in a position where we're like, oh God, I can't handle this anymore. I have to sell this property, right? So you need a significant amount of cash flow, or a sufficient amount of cash flow. Yeah. And if you're wondering how much is sufficient, go pick up this book on Amazon. It's called The 5% Rule, a cash flow test for Canadian real estate investors. Look at this. It's not very big.
It's so skinny.
It's so skinny. It's so small. What could possibly be in there? Nothing but
gold.
Value.
So much gold.
I could
Only
make it 300
gold.
pages.
Yeah.
I could make it 300 pages. I can put some pictures in there. I can get my daughter to draw some diagrams for you if you'd like. But ultimately, it doesn't need to be long. And what it's all about is all about simplicity. Okay, and that's what this whole book was about simplicity, making it simple. The 5% rule is a very, very, very simple rule to follow, so that you know that you have enough cash flow to ride out all of the inevitable shitstorms that come in real estate investing, right? And we've seen our fair share of shitstorms.
Yeah.
Right?
Absolutely.
So many storms where people have been knocked out and capsized and forced to sell or foreclosed on, or they lost all of their life savings or whatever, right? All because they didn't follow this rule. So if you follow this rule, it'll give you a sufficient amount of cash flow so that you can ride out those storms and you can hold onto that property for the amount of time that you want to hold it for in order to realize all of those gains that you work so hard to get, right? And to make sure that if you have made a significant amount of profits from this property, that you're not forced to sell it before you want to sell it. Because we do make a lot of money every year. We pay down our mortgage, we make all that cash flow and everything else. One bad storm can wipe you out. So you need to make sure that you have enough cash flow so that you can ride out that storm and continue to hold that property for years to come, to hold that profit that you've made and realize all the potential additional profit you're going to make through appreciation. So highly recommend going to YouTube, not YouTube, Amazon, and picking up that book. It can be ordered. Depending on where you live, you can have it probably tomorrow morning at 4 a.m.
Yeah. Wayne, I really love that that you wrote that book and that it's available for people as a tool. I had somebody reach out asking, they wanted to get into real estate investing. They were wondering if they should turn their current residence into a rental property and go buy a new primary home and that sort of thing.
Good for them.
And exactly what I said. I said, this is amazing. And I said, I think that the thing that's missing here that you just need to know before you can really make a decision is, will your property that you're living in right now work as a rental property? And I said, I know you've been listening to the podcast a little bit. You've been following us. Have you picked up the book? Have you read the 5% rule? And she said, no, how do I get it? And so I sent her the link and she's like, oh my God, thank you so much. It's like such a good starting point to learn how to run the numbers, but then also make sure that, just not that you know what the numbers are, but like, does this work? Is it sustainable? So I love that there's just this, now we have this quick, easy tool that it's like, here, just take an hour, read this book.
Most people said I'm done in 45 minutes.
Yeah, you'll know everything you need to know to really analyze and build a really safe and profitable portfolio.
Every
I love
single
it.
review I've gotten on it and every single piece of feedback has been positive. Everyone's been like, I fucking loved it. It's amazing. Only one person has said that had something negative to say. And what they said was, I can't believe that's it. And my response to them was, you're welcome. Do you want me to make it longer and more complicated just so you feel like you got value out of it?
No.
I cannot stand when people are like, that's it?
Yeah.
Are you that fucking dense? That's the whole point. You paid for something.
Let's get to the point.
Something. And you were hoping, when you pay for something, when you do a transaction, you exchange value, you pay value in order to get something. And when something is delivered, you know, that's a good thing, right? And there's, especially these days, you know, so many people pay for education, they pay for books and things like that, and then they don't get what they were hoping for from it, right? So this is it. This is a very, very simple formula that you can use, that every single Canadian real estate investor should use. It's so simple. We made it that way so that everyone can do it and that everyone can avoid screwing up and getting, you know, capsized when the inevitable things happen, like interest rates changing, rents dropping, vacancy rates, all those other things. Like things, it will happen. It happens every couple of years. Every couple of years, there's some new shitstorm coming in that is wiping people out. It is like every storm comes in, storm goes out, everybody's like, yeah, they're on the beach, everybody's having fun, everybody's dancing. And then eventually the wave comes back in, they all get wiped out, and then they all go out, you know, they get flushed out to sea, and then everybody else comes and starts partying again. Every couple of years, it keeps happening over and over and over again. I mean, nobody ever knows about the people that were there before they got wiped out because no one ever hears their stories.
It's like natural selection.
It is kind of like natural selection.
Sorry, I had to say it. Oh, I wish I didn't. Sorry.
Don't worry, they're not around anymore because they get wiped
true.
out and then we never ever hear from them
That's
ever
true.
again. But it's sad. I mean, okay, it is funny. It's fucking hilarious, but it is sad.
Yeah.
Because they were having so much fun. They had all these amazing dreams, and I'm just so tired of seeing it happening. So what if people were warned about things like these? What if they actually maybe set up their party a little bit higher upshore so that they don't get wiped out, right?
Yeah.
So that they can actually, the wave comes in, they're like, okay, guys, we should go. It's coming. And then they step aside. Or they built a really, really good fucking setup where the wave comes in, it doesn't wipe them out.
Yeah.
And then it goes back out and they're still there. This is, the symbolism and the imagery is not really making all that much sense. But the point is that it's inevitable. The waves are coming. The storms are coming. You can't avoid it. And I have no idea what the next storm is because they're so unpredictable, right? But the point is not to try and avoid the storms. It's how to weather the storms, how to build it so that it lasts, how to build a strong ship that you can set course and, you know, go out to sea and you can make it to your destination, right? And in a lot of cases, those trips are very long. We intend on holding this property for 15 to 20 years. We know that there's going to be about at least 5 things that are going to come in and try and capsize us during that time. How do we build it so that it lasts? That book, swear to God, it's the easiest thing you can do. If only that, and you ignore everything else, all the other fundamentals, if only that, I feel like most people will, at the very least, make it there, as opposed to quitting a few years in. Right? Kirsten has a question. She says, will you be teaching us how to weather the storm in the cold tomorrow at the bus tour? No, but be proactive, right? If you know it's coming, then wear a jacket.
There you go. Right it here.
Wear a jacket. Okay. Anyways, very excited. Edmonton's had its fair share of storms, you know, at least in the last 20 years. You know, since 2005, obviously we had, 2008, we had the housing crisis, right? So during that time, it's, you know, that affected real estate prices. Real estate prices, you know, dropped a bit. it affected us, but it didn't really affect us. It kind of affected affordability and the economy a little bit during 2008, where a lot of projects were canceled, jobs, were lost and things like that, which, decreased the demand in real estate. So the real estate prices went down, but it didn't really affect the rental market so much, except for maybe in Edmonton, I guess, when people were losing their jobs.
Yeah, I think a lot of people were leaving. And,
a lot of people left
going back
after
to
2008.
their other provinces. Yeah.
East Coasters kind of left it because it was booming, baby, at that time. Like so many places were looking for employees. Like it was crazy. The signs everywhere, sandwich boards, hiring. And then when the sandwich boards started getting taken down, that's when obviously we start seeing an exodus of people that weren't from Edmonton leaving. And then obviously the rental market, because that demand came down, that affected the rental rates a little bit, but not so much. And then in 2016, oil prices went up, and then that was a huge shitstorm. We're same kind of thing. A lot of people left again. Housing prices kind of like a little stagnant there for a bit. And the rental market was a really bad time for the rental market, where we were having to do incentives for about 2 years, right?
Yep.
And then 2020 happened, the pandemic, right? And that affected the rental market significantly. It also affected the real estate market and the prices because a lot of people were not buying. But during that time, they lowered interest rates, which kind of really sparked a huge influx of people wanted to buy houses. And so a lot of people were starting to buy houses. Prices start going up. Things were looking really good in 2021, 2022, the pandemic. That sucked. That really, the pandemic was 2021, 2020. Interest rates was 2022. That was the big, that one really sucked. Interest rates start going up. They go from like 2% up to 7% overnight. And so these are just a few examples of just some of the shitstorms that have come to Edmonton. It affected everybody across a lot of Canada, but just a few of the shitstorms that have kind of happened over the last 20 years, right? And this is what I mean. They're inevitable. They literally happened every couple of years. But even though Edmonton has been thriving throughout this whole run, and people have been investing in Edmonton since early 2000, it has been, in the last 25 years plus, has been arguably one of the best places to invest because of the thing that helped us weather all of those shitstorms, the cash flow. The cash flow that we have here is the reason why everyone who's investing in Alberta, and specifically Edmonton, we've been able to weather it. As long as you followed the 5% rule, as long as you had enough cash flow, right? And so that's why so many people have done so well and continue to keep investing here, while other markets have had their day and then they didn't, right? And then people just kind of leave. Edmonton has just been very consistently reliable. And I'm excited to share with you what's going on in the Edmonton market right now, today in 2026. Calvin Hexter is going to be joining us when we come back from the break. And we're going to share, a few reasons why it's such a great market. I explained cash flow. We're going to go through some of the statistics of what's going on right now in the real estate market. And then Calvin will share some more insights, and we'll share some more insights on why we love this market so much. So stay tuned. Do not change that dial. We will be right back.
You are a professional real estate investor. You are not a professional boxer. And you are definitely not a professional bookkeeper. Enter Fingo. Fingo is a professional bookkeeping service by and for professional real estate investors. Your life just got a whole lot easier, and your profits are ready to soar. Leave the bookkeeping to Fingo so you can focus on what's most important, finding the next deal and raising money for it. Schedule your free consultation at fingo.com.
Okay, and we are back, and we've got our special guest, Calvin Hexter. Good morning, sir.
Good morning. How are you two?
We are good, man. How are you doing?
Doing great. Great to be here this morning. Great to see you guys.
You are.
This is so exciting.
You are the first live video guest on the Canadian Real Estate Investing Morning Show. And we just lost connection. Are you back?
Yes.
As soon as I said it, I saw a big thing come across the screen being like, oops, we lost connection. Can you tell me, are we still on YouTube?
Yes,
I don't have access to see the comments.
I'm
Can
watching.
You see them, Gabby?
Yeah, I'm watching.
Oh, okay.
Yeah.
Awesome. That was hilarious. I said, you're the first one. It's like, oops, we lost connection. This has been an absolute journey to get to this stage where we can where we can have the video podcast and then getting our first guest on. So thank you so much for being the first guest on the show. We really appreciate it.
Thanks for having me. It's exciting to be the first guest. We'll have to make it action. Well, it already has been action packed, so we'll make sure that we give it a big bang for today. So all the listeners and watchers.
How are you doing, Calvin? Are you enjoying the weather? Is the pool open? What's going on in your life?
You know what? Things are good. Things are good. We're doing all the things that you should be doing right now, and that's preparing your lawn to get extra green. Greener than your neighbors.
Yes.
Raking the mulch out and doing all the things here so we can leave and enjoy everything else. We have a trip to Kelowna, speaking in Kelowna next week. So the goal is to get everything healthy and good here so we can leave and not come back to what you don't want to, any of the nasty stuff. So,
yeah.
Love it.
Yeah.
Kelowna sounds nice.
Yeah. We're doing lots of traveling lately, lots of speaking, and it's great because I can take all of all that information, all the contacts, and deliver it here. And interesting enough, we were at another event recently, quite a large event, and we brought a map of Canada with us on this big poster board, and we wanted to see where has everybody been investing and where is everybody looking to invest for 2026 and the beginning of 2027. Do you know where 90%, so we had about 300 pins on the board in total. Do you know where 90% of those pins were in respect to where people want to invest?
Dunnville, Ontario.
You were so close.
Inside joke.
Little inside joke from this week.
Edmonton,
Alberta.
Alberta.
I'm willing to bet it was Edmonton.
Yeah, Alberta, and I think 70% within Alberta were Edmonton. And so
interesting.
It's interesting because I talk about this all the time. Edmonton's like the boring city you invest in. Yeah. Edmonton is like your comfort blankie. And you always go back to Edmonton because it offers consistency. It offers, again, that like comfort, that warmth, and it consistently delivers. It doesn't have major fluctuations, and it is boring.
Yeah.
Right. It is boring, but boring often will earn you the greatest income over the longest term.
Yeah.
Versus what we're seeing in these other markets.
You may run off with that quarterback or that captain of the hockey team, but you always come crawling back to Edmonton.
That's right. Safe old boring Edmonton.
Yeah, because you know what? We'll treat you good, right?
Mm-hmm.
We'll take care of you. I don't know where I was going with that. They all come crawling back, though. You know what I mean? They run off and they try some new market because they think it's the next big thing, or they try some new development thing, or I'm going to be investing in some stupid new thing, cottages, or I'm going to invest in Dallas, or whichever. They go and run and they whatever the new thing is that everybody says is the new gimmick, the new scheme, and then they all come back because it's safe, it's reliable, and it's consistent. And I think that's what people want when they get into real estate investing. They want to invest to know that the money that I have, the savings, I want it to grow and I want to pass it on to my next generation. And you don't want to put that all to risk. You've seen the terrible stories over the years, just all the people who have lost hundreds of thousands and millions of dollars, just trying new stuff out. But had they stayed in Edmonton, they would have had these consistent returns that we're getting, and they'd be so much further ahead.
Mm-hmm.
Yeah.
Yeah. And a lot of locals that grew up in Edmonton, they don't necessarily look at the city through the investor lens. And so they don't necessarily understand the benefits. They don't understand the Alberta advantage. They don't understand the cash flow advantage. They don't understand, just the amount of benefits and ease of being a landlord in comparison, or just the costs of living in comparison to these other provinces. And that's why when you have events like you're hosting, tomorrow, you'll have people that have flown in and they'll mingle with locals and, talk about the horror stories of what they're seeing out west, out east. And it really kind of allows you the space to appreciate your city that much greater. And having a home field advantage, allows you to understand the neighborhoods better. We talk about the desirability map, A, B, C, D areas. And actually, one thing I want both of you guys to do is I need you guys to take an investor quiz. So we created the design. Have I shown you guys this yet?
Sorry?
The map?
No, the investor quiz to understand which area
Oh, no.
relates best to you. So we have the
Is this a
desirability map,
personality
right?
test?
It is a personality test for an investor, and it is extremely accurate.
Okay, this sounds
Okay,
fun.
so
We got to do this. Can we do this now?
you can absolutely do it now, but give me a moment,
Sure.
right? Because my hands are up here and they have to be down here. So let me explain
Okay.
it first. Okay, so the desirability map allows you to identify. It simplifies. Real estate investing has been far too complicated and is getting too increasingly complicated year after year, month after month with everything that is happening. We need to go back, dial it back, and we need to simplify. Simplification, understanding what your goals are, what are your resources, and what is the best way to achieve those for you. Because there's a million different ways you can make money in real estate. And so, in order to help us simplify the process of real estate investing and focusing on the fundamentals, we've created this investor quiz. And it's a 4-question quiz that's going to help you identify which areas of any city best to relate to you as an investor. Okay, that was a big one. That was, you guys need the Joe Rogan sneeze button. And you have your A, B, C, D areas, and not every area fits each investor. A areas obviously are the most desirable, most expensive. They tend to be more primary home focused versus investment focused because the returns aren't there. B areas tend to focus more on tenant profile, lower vacancy than the average, and that's more of like the long-term investor. They don't really care about enough cash flow to cover your asset. C locations are people that value cash flow and having enough returns from that asset to cover all expenses, even in the market fluctuations, both through vacancy and rental. D locations are those that like to play in the riskier areas that like the larger returns. They're a little bit more of an investor difficult approach, and they understand that tenant screening is the number one priority. So this quiz will help you identify which area best suits you. And then we have this desirability map that shows you all the different pockets as it relates to A, B, C, D areas and what they offer you. You can literally understand what part of a city you should be investing in less than 10 minutes.
Yeah.
Love that. That's amazing.
Very cool, man. Very cool.
Do you want to try the quiz?
Sure.
But I need a quick filler because I'm going to need 15 seconds. Gabby, can you tell us a joke?
Well,
this is a great opportunity to speak about one of our sponsors, squishdaddies.com. If you're a daddy and you love squishies,
I thought it was
slime daddies? Okay, if you're a daddy and you love slime, go to slimedaddies.com.
Well,
someone's going to reserve that website today.
100%. But Wayne, I thought it was really funny that you muted us for a moment to clear our throats, but on the back end, Calvin could
sorry,
hear.
just 1 second.
Are a professional real estate investor.
Calvin's got some audio on in the background. Okay.
I sent you guys the link in the chat, and I sent it in the main YouTube chat just so everybody else could try the quiz as well.
Okay. Sorry. Continue on, Gabby.
Oh, I just thought it was really funny because you muted us so that we could clear our throats. You had to cough.
Yeah.
But Calvin's on a different, he's in a different application, so he heard us, and that's when he was like,
Yeah.
"Oh, you guys need the Joe
you
Rogan."
can hear everything.
Yeah.
Oh, that's
Yeah.
right. That's right.
Yeah, I can hear when you guys see Wayne lean over to his left cheek, you know what's coming.
Oh, you can hear the
Yeah.
horn. Okay, got it. Okay, that's funny. We didn't realize that we were unmuted for you. Yeah, it's quite the setup.
Every time I
Anyways.
hear the horn, guys, I'm gonna go in the comment section of the YouTube video and do a little horn emoji, just so the listeners know what I get to enjoy as well. Okay.
On the back end,
Okay.
yeah.
That's funny.
Yeah.
Literally the back
So I've gone
end.
ahead and I've added Can you see the chat right now? Can everybody see the chat?
It hasn't come through for me.
Okay,
It's on a delay. But
Okay, so I threw it in the chat, but I also put it in the private chat that we have as well. And let me know if you guys see that. And you know what I'm going to do? I'm actually going to add an extra layer, and then all the listeners can see how you guys scored as well. Okay. So I gone ahead and sent it to you guys in your text as well. So take the quiz, 4 questions, and then I'm going to add 2 extra layers to it. I'm going to copy the desirability map over so you can see which areas best relate to you. And then I also have a description of how those areas work, almost like a personality quiz. Now that you've realized that you're orange, what does this mean for you?
Okay. So the first question is, what matters most to you right now? Strong monthly cash flow, long-term appreciation, high quality tenant profile, or low vacancy and stability? Strong monthly cash flow, long-term appreciation, high quality tenant profile, low vacancy, stability.
Cash flow. This is unique to us, by the way, so don't copy our answers.
How would you trade off cash flow versus appreciation? How would you trade off cash flow versus appreciation? A, max cash flow, even if appreciation is limited. B, balanced between cash flow and appreciation. C, lower cash flow is fine if appreciation is strong.
B,
Balanced.
balanced.
Okay.
You know this, that 66% of your total profit over a 15 to 20 year span is going to be in appreciation. So do not just buy a property solely for cash flow, and not for appreciation, because you're going to be missing out on a ton of profits. Unless, of course, you're like 67 years old and the whole focus for you is on cash flow, then yeah, it's a different stage, different priorities at that stage. But for me, I want a healthy balance of safety, security, and profits long term.
Okay. What level of tenant/vacancy risk are you comfortable with? A, very low risk, so stable tenants, low turnover. B, moderate, some turnover is fine for better returns. Or C, higher risk, you're okay with challenges for maximum returns.
I'll go with challenges, maximum returns. I can handle anything.
Okay.
You're not very cool with that, though, because
I'd prefer
you're the
B.
one doing most of the work.
I'd prefer B.
No, profits.
Okay. And number 4, what type of investment experience are you looking for? A, hands-off, predictable, easy to manage. B, some involvement is fine for better returns. Or C, I'm comfortable being active/aggressive to maximize returns.
I could do C. We got really good systems.
Yeah, for sure.
Yeah. I'm curious to see where.
Now you're going to collect my information so you have me in your database.
Oh my
to
God.
get the results.
Oh
Typical.
my.
Typical.
No, it emails you the results.
You know what? Worst case scenario, Gabby. Worst case scenario, you might get an email later with a really amazing deal in your inbox. Does that really sound all that bad?
This
So
is true.
the extension of this is those that want to opt in, once they determine where they fit best, they have the options to receive deals that
Love
best fit those locations.
Love that.
The next step is understanding the strategy that you're looking for in those locations, whether it's value add, turnkey, the size of properties. And it just helps, again, simplify the process in what many of us have overcomplicated, in the grand scheme of things, right? And I know that you guys are great at simplifying the process. That's why a lot of your mentees are able to take action, is because they have this clear sight. They have the fog lights on to see past everything that's going on, get clarity on their direction, and arrive at their destination.
Absolutely. So Calvin, I'll be really interested to know if you have somebody on your team who could track how many quizzes get filled out this morning or today in general, because there'll be people listening to the podcast after. So I want to see if you guys get an increase in quiz results today.
Sure hope so. Okay, so I saw an email pop up.
What did you guys score?
Your investor type is D areas. High cash flow options, higher risk, higher return. It says you are an investor type D.
Okay.
Oh, yeah, okay.
Was there? Did I hear you say something about colors earlier, though?
Blue. We're blue.
We're blue?
Yeah.
My only concern is, now you've collected my information, am I going to start getting sponsored ads coming through texts, through emails, through Meta, just basically saying, like, am I going to be getting like emails saying like hot and horny blue investors in your area are looking for a good time? And it's going to start matching me up with other blue investors?
That's right. It's going to say this blue investor is near your house right now. Would you like to let them in? Yes.
Lonely blue investors are looking for joint venture capital.
But I mean, let's just take this to the next level though. I mean, if you find out, so we like to take higher risk because you guys have the ability to. You have the systems, you know how, so you can achieve the higher returns because you can mitigate the challenges that come your way. And so it's interesting if you're looking for JV partners, I think it's important to have some sort of alignment. And you could do something like this. And there's many extensions from this quiz that we've created that will be that I think I'm going to hold off until next show. And I want to do it in a bit of a campaign sequence. So you can kind of you can use this just to help with your investment journey, but also get matched up with other investors, not in the sense of dating, but it is kind of dating when it goes into the JV partnership discussion.
Yeah.
And it just helps kind of, again, clear alignment.
Yeah. And well, when you look at this, Calvin, like I would say that if we put our entire portfolio and plugged it into the desirability map and where they fall as far as these letters, I would say that all the properties that we've picked up like early on in our journey were probably like B and C areas, like safe and, like that, like low risk and very comfortable for us. But as our systems grew and as our experience grew, and now to where we are today, we're completely fine picking up properties anywhere. We know how to handle any situation. We're not scared. There's no fear. And like you said, it's like there's a comfort in just like we know how to handle any challenge. We want max returns, that sort of thing. So it's interesting to see that kind of like journey of a real estate investor, and what might be important now can change in the future. But also I think that the access to information and education and speeding up that process, especially for, say, students of, the REI Master's Mentorship Program, I would say that probably less of them start out in B and C, and more of them might be more comfortable going straight to C and D because they've learned. They've gotten the education quickly. They've gotten the systems handed to them. It's like plug and play, right? Yeah. Where they might find themselves there a lot sooner in their investing process than, us starting, over 15 years ago, where the education wasn't there and we had to learn everything and build the systems ourselves. So I just think like it just kind of like sparked some curious, thoughts, just going through that process right now with you.
And I know you work with a lot of our students who are investing in Edmonton as well. I mean, most of our students are experienced and knowledgeable enough to know where the best opportunities are. So I know you work with a lot of them. And from what I've heard from you guys and your team is that like, they're really easy to deal with. Like they don't have a whole lot of questions. They know exactly what they want, where they want it, and they're cool with everything, right?
Absolutely. Yeah. And I would say that's the biggest challenge that most investors have is just a lack of clarity and not knowing what they want. And so opportunities will come across your plate as an investor. And many investors say there's no good deals out there. And it's not that there's no good deals out there, because there's a lot of good deals out there. There's a lot of great deals on market. There's some good deals off market. And when you're not prepared, you're not going to realize the opportunity that you just saw. And being prepared is understanding what your goals are and what those metrics mean. In a lot of cases, we'll have investors that want A locations with the highest level of cash flow. And those two things don't fit with each other. They're two opposing views. So a lot of times it's having these views or this interpretation of what is achievable that's not unfortunately achievable. You have to pick one direction. And it's a bit of a tug of war match where like the best cash flow is not going to come with the best tenant profile and the lowest vacancy areas. Mm-hmm. We have to understand what is the most important to us. And if something like balance is because you want the best of both worlds, then you would be looking at either a C or a partial B area, right? And it's just having those conversations of it. But we see great deals get passed along all the time. And because that investor's not prepared, the opportunity is now lost. And you guys do a great job of making sure that when preparation meets opportunity equals success.
Yeah, absolutely.
Awesome. That was a fun little sidebar. Should we jump into the stats, the Edmonton market stats?
Yeah, I'm incredibly excited about this because, I mean, I have a pretty good gauge on the market right now and the temperature of it based off of being active in it and then having discussions with you. But, you know, seeing it from the other side, which is the side of the investor-focused realtor, you're seeing things that I'm not seeing on the residential side. And I'd love to know what how the stats came in for April and how you're reading the gauge or the temperature of the market right now.
Mm-hmm. So last month we were at 2.9 months of inventory. We're now dropping to 2.8 months. Let's understand first, before we go into the stats, historically, what do we expect seasonality as you enter spring, summer? What do you guys expect?
Things to fire up, lots of stuff to hit the market, lots of buyers to be out, things moving more quickly, competition, multiple offers.
Mm-hmm.
Yeah, typically.
Yeah. So we're seeing it heat up, but it's not to the extent of your typical expectations at this time of year. And so last month we saw 2.9 months of inventory. We're now at 2.8 months of inventory. We are seeing increased volume, but it's not to the same extent that we would expect. And so it makes, and right now, if there was a needle and this was a buyer's market, this was a seller's market, and this was a balanced market, we're right about here. So
Okay.
we are in a balanced market that's more favorable to sellers. And based on where we should be at this type of market, where we should be seeing even more of a graduation towards sellers and that activity, it makes me believe, because we are seeing a little bit of a slower start to the summer, that quarter three, quarter four, we're going to be hitting balanced and even more buyer favorability.
Interesting.
Okay. When it comes to prices, it was more or less flat with every type of asset. The only asset that saw an increase was condo apartments by 6.4%. And
Wow.
condo apartments, we don't typically recommend investing in condo apartments because there's too many external variables that can really challenge you as an investor, and just your exit is just incredibly tough, right? And that would be the only asset that I would say, put a big red warning sign next to. And so, based on what we're seeing in the stats, and if we know that it's a seller's market, one thing I could say as well is a lot of buyers are like, well, I'm never going to buy in a seller's market. I'm never going to buy in this market. And if you always create reasons of why not to, you never will.
Right.
And it always comes back to the numbers. If the numbers make sense, then purchase. If they don't make sense, then don't purchase. And that goes for a buyer's market as well. If you're running the numbers and they don't make sense for whatever asset that is in a buyer's market, don't purchase it, right? And so at the end of the day, it depends on, are you able to meet that target and is it realistic? But right now, we're just not seeing the movement that we would expect, especially now that all of the primary home buyers are being introduced at a higher level, right? Investors will invest all year, right? Month 1 to month 12. Primary home buyers tend to be the busiest in, quarter 2, quarter 3, and then quarter 4 and quarter 1 is when they tend to sleep in. They tend to stay on the couch, stay inside,
Right.
and they hibernate.
Right.
Yep.
So some people might hear this and think that this is a bad thing as an investor.
No, I mean, I think when you look at the market, so let's talk about like what does this mean to sellers? What does this mean to buyers? What does this mean to investors? That's how I categorize it. For sellers, you need to be more strategic with your selling process. You need to have a very clear idea of who your end demographic is that's most likely to purchase. You needed to advertise in a space that they shop homes. And if I'll give you a basic example because I know we don't have all the time. If you have a property that's most likely a first-time home buyer that's going to be purchasing, understand that most first-time home buyers typically aren't as educated as second-time or third-time home buyers. So if you have a crack in your baseboard or something small that could be aesthetic that is not an issue, they might see that as that the house is shifting and that there's a serious foundation issue.
Mm-hmm.
And so doing these small things can help prevent future objections and allow you to receive greater offers. So understanding who that demographic is that's going to be eyeballs on the property, not only clicking through the photos and what do you want them to experience, but also what is the experience as they're walking through the home. So, and there's so many layers to it, right? And so from the selling side of things, you need to be prepared more than ever because you are going to have competition. You're still going to see multiple offers, but there's going to be a ton of properties that are going to fall through the cracks 45, 50 days on market.
Right.
Okay. On the buying side, as a primary home buyer, you're seeing more opportunities hit the market. Right now, you are going to see more options than any other point throughout the year. Between quarter 2 and quarter 3 is you're going to have the greatest volume. Now you just got to determine when are you looking to take possession? Because if you start to purchase in like August, your possession might be in the colder months. And so just being able to plan your possession, knowing that it takes about 60 days to 90 days from the point of shopping to possession, and just make sure that you're planning your schedule around your summer plans. But
Right.
right now is a great opportunity to see the greatest amount of options, and urgency is required still on some of these properties. Okay. From the investment side, there's great opportunities with sellers expecting that their home's going to sell like this just because they put it on the market. And traditionally, spring and summer markets just equal sales, right? But that's not the case. Sellers have to work hard to get the sales right now, and a lot of them are going to fall through the cracks. And desperation is the highest, right around 80 to 90 days, or 110 to 120 days on market, especially with the listing agent, knowing that that's when most contracts expire. And you want a motivated listing agent to work with the seller. You'll have a higher probability the more people that are willing to make a deal happen. And so just understanding how that works in the back end, as well as repeated price drops. Right now, we're noticing a ton of repeated price drops. Some people are on a repeated price drop schedule where it's every 2 weeks they drop by 10K, 5K, whatever it is. Save the seller some pain, rip the band-aid off, and give them an offer that makes sense to you. And you'd be surprised at how many might achieve that. And then my
Interesting.
third thing right now is that seller financing is the largest topic in a market that is softening, because sellers' expectations are up here, buyers' expectations are down here. And a lot of times, to bridge that gap, seller financing is a great option. It offers the convenience to buyers, and then sometimes it offers the sale price to sellers. And so those are the three areas that I'd be focusing our attention on. We don't see a ton of expireds right now, just because this is where most expireds come back and aim for that mulligan because they weren't successful last year. So now they're trying to reattempt success this year.
Awesome.
In case you guys didn't notice this, the investors that are listening right now, you're not mainly, most of the people that are listening to the show are not home buyers. The investors that are listening right now, this is actually really good news. And this is part of like what Calvin was saying earlier about what I was saying about, they always come crawling back. If you were hoping that the values were gonna, like there was gonna be a super hot market, and you were hoping that there was gonna be lots of buyers and that prices were gonna go up and skyrocket. I mean, I don't know why anyone would. I mean, unless of course
Unless you're planning to sell your portfolio.
unless you're
and
hoping
you
to
want
sell,
maximum, yeah.
right? And you know, we know this because we have a property for sale right now that has had like next to no activity whatsoever. It's not an investor product mainly. It's more of a home. But we know that. So I really wanted a really strong market because I wanted to get top dollar for the property that I want to sell. But as an investor, I'm just like, hell yeah, this is awesome. There's no competition. We're going to have, sellers who are in a position, like you said, 80, 90 days where they're getting a little bit desperate, and they're like, then I can start getting some really good offers in. Like this is actually a really great opportunity because of the fact that we have such amazing opportunities, cash flowing opportunities in our market. There's going to be stuff sitting around not getting picked up, and I'm just going to go and snag it up because nobody else is making an offer. So I think this is a great opportunity, and you really don't know this until you learn this, guys. We didn't know this in January. We're literally just finding this out right now. But when you get this information, it gives you the intel that you need on how you plan to attack the real estate market this year in 2026. And if that's what's happening and that's what the landscape and the environment is, then we need to formulate, are we in a position where we're going to be refinancing and selling, or are we in a position where we're going to attack and start loading up our portfolio and getting some really good deals? And for me, I just called you the other day, or I just texted you the other day. I'm buying, buddy. I think I'm going to be buying 4 properties here in the next little while. That's the plan. At minimum 4 properties. Like I've got my search all set up. I'm just waiting for the right deals. We wrote an offer last night, right? It's in this type of market, this is where you attack. This is the opportunity for you to take advantage of the situation and the environment and go for it, right? And in other, environments, maybe you're not so aggressive, right? But you need to be adaptable as a real estate investor. A good one, at least.
Mm-hmm. Yeah. And so a lot of those that feel FOMO, like they missed their mark in the previous past, where they're like, I should have bought then, and regretting it. Look at what, some of the best coaches are doing in North America, right? And you heard it from Wayne and Gabby that they're purchasing right now.
Oh,
And
shush, they can't see this. Can't see the sweater. It's being blocked by your image there.
Sorry, go ahead.
Here, wait. How about now? No, I'm just kidding.
Yeah.
But that's entirely it. So this is a tremendous opportunity. I'm really happy to hear this. It sucks that this property that I'm trying to sell is getting crickets, but it is what it is. You know what I mean? Like
on the other side of it.
On the other side of it.
Yeah. Just picking them up left, right, and center.
Let's go. Let's load up. And who knows? Maybe next year we have a huge bump in prices, and maybe that's the year that we want to do our refinances while we get the highest appraisals or the best sold comps. Mm-hmm. It is what it is. And we really don't have much control over this. We don't have control over the masses. We don't have control over the demand from home buyers, first-time home buyers every spring. We just don't know how many are going to come out. It's kind of like the groundhog, you know what I mean? Like, we don't know. We're just kind of waiting to see if it sees a shadow or not. And if it does, cool. If it doesn't, cool. But it really, that information, that intel will determine how we react and how we adapt to the environment, right? And so I think this is a tremendous opportunity. I'm very excited for it. I already know exactly what I'm going to be buying. And it's just a matter of going out and writing those offers and just offers and see what happens, right? So, for real estate investors that are, looking at doing something like this, first step is obviously go and take the quiz. That'd be a really good start. Calvin Realty has a really great quiz. Figure out what areas you're looking at, what types of properties you're looking at. Do that quiz, and then, reach out to someone on the team and say, hey, I'm a blue, or hey, I'm an orange, or whatever. And get set up on your search. And do you mind kind of talking about that? We got a little bit of time left in the show, but do you mind talking about that process for someone who's just new to real estate investing? They've established what type of property, what type of area they want to buy in. What's the whole process for getting started with one of the team members at Calvin Realty on setting up their search and the next or first couple steps of going and looking at properties?
Mm-hmm. So as you mentioned, we want to get a good understanding. The first part is getting to know you as an investor, understanding why you're investing, what are the resources that you have available, resources such as money, time, skills, and then we can make sure that things line up with the strategy that we've decided. And if there's any gaps, we figure out how to fill those gaps, whether it's with partners, whether it's with education, whatever it might be. We would get you set up on a custom search, and we could be very particular with searches. A lot of people don't realize we can search foreclosures only. We can search seller financing only. We can search so many different things that a lot of even other realtors have no idea that we can find on the available MLS. Plus, we have such a large volume of off-market deals that we send out on a weekly basis. So it's getting a good understanding of what you're looking for, what exactly does that look and feel like, and then we go ahead and look off market, on market. If we see something that triggers, the goal would be to get out and view it immediately. If we can analyze our numbers beforehand, that's always ideal. Once we go out there, we analyze we start with the neighborhood to understand what is that immediate neighborhood, because sometimes you'll see communities that might be labeled as a B, but where it sits on that street might challenge your investment in the sense of, are you backing onto density, facing a parking lot, backing onto a graveyard, next to a large apartment complex? You should understand how this affects your investment. Are you a corner lot or an inside lot? What's your lot size? These are all the questions that we ask. And the biggest mistake that a lot of investors make in addition is they don't ask enough questions. So that's what we do when we go out there with you, is we show you what kind of questions you should be asking. Again, getting your investor goggles on through the right lens. And so we start your investment journey off with a true understanding of creating these good habits of what to look for. As we enter the home, then it's analyzing the capital expenditures that might be acquired, cash flow that might be able to be achieved, etc. And the goal is to be able to narrow down every single property that we see. In your experience, we should be narrowing down to get closer and closer and closer until we find the right one for you. And again, it's important that it's the right one for you because your journey is authentic to yourself. And it's important to be laser focused on what that is, right? Once we find something that we like, We would go ahead and present an offer. There is a monetary amount that would be in the form of a deposit that's fully refundable if you don't end up pursuing that property. And normal conditions of pursuing a property would be financing, inspection, potentially condo document review. There's other options for conditions as well, but those are the top three. And they give you time. The seller gives you time. So if you find something you like, you want to tie it up, right? It's kind of like you want to put an engagement ring on it. It doesn't mean that you married it. You still have, in some cases, you look at my cousin, 5 years to figure it out, right? But you want to put a ring on it, right? And there's a cost to it. But the nice thing is that if you decide not to marry it, them, whatever, you can take that ring back and there's no cost.
Well,
Okay?
hopefully they give the ring back. Hopefully.
Hopefully they
Five,
give the
5 years.
ring back.
I don't know. They might be screw you.
So if your deposit lingering for 5 years, that might be gone or part of it. You
Yeah.
might have to split the ring. Who
Yeah.
knows? Yeah. But you put the ring on it. You decide whether you want to marry it or not. And so putting the ring on it early is a good thing because you prevent someone else from doing it.
Right.
Yeah.
It's
Kind of what you did, Wayne, with Gabby.
Yeah, I dibsed it. Except I
You
just
dibsed
I just
it.
licked her. Mine.
You put the candy ring on. You're like, okay, you're mine, baby. Yeah.
Yeah.
So that's what you do as an investor is you like something. It makes sense on the macro perspective, and then you put a ring on it. Allows you time to do your due diligence, and if everything makes sense, and we asked all the questions and the answers, there's no perfect property out there. But if it checks most of the boxes, proceed forward with the purchase, and we prepare for possession.
How many people were
Excellent.
singing Beyonce through that whole thing?
Oh, I didn't even think of it.
I was waiting for the button.
Either the chat is really quiet or my chat stopped working. I haven't seen, yeah.
We'll find out later.
Yeah.
But regardless, this has just been incredibly valuable. And I
100%.
thank you so much for sharing that as well, sharing what that journey looks like. Because a lot of fear around real estate investing is just the unknowns and the uncertainty. And when you don't know what's coming and you don't understand the process and you don't understand how everything works, even something as simple as the offer engagement ring or the deposit and that it's refundable, that feeling right there can give someone so much confidence and assurance of knowing, hey, worst case scenario, I don't have to. I can just get that ring back or I can get that deposit back. So, that should give people more assurance and confidence to go out and just start writing offers. You know what I mean? Once you've established what it is that you want, set up your search with Calvin Realty, go out there, start writing offers, start getting in those properties, start, familiarizing yourself with it. And then, like I said, like if you understand the process, you're gonna realize this whole thing about buying rental properties is not really all that scary and complicated. It's actually a lot easier than you think. And when you get that first deal done, it's just there's so much weight off your shoulders. And you're like, wow, that was easy. Let's do another one, right? So thank you for making that so clear and understandable for all of our listeners and all of our followers. And guys, if you were interested in purchasing rental properties or a home or selling any properties in the Edmonton area, I highly recommend reaching out to Calvin Realty. They're our team. That's who we've been using for years. Love them. They're fantastic. They're all well-trained. They're investor-focused. They work with investors every single day. Couldn't recommend them more. CalvinRealty.ca, if I remember correctly. I don't go to your website. I just reach out to someone on the team. But and again, Calvin, thank you so much for being on the show today and sharing all that. It's been an awesome experience and so great to have you. I get to have a conversation with you now. I get to see your face. This is so awesome.
Absolutely. And thanks for having me as your very first guest. I'm excited for your next chapter. I think it's amazing. And it's just another way that your community can interact with you to the next level, right? With that engagement. So,
Thank you.
All right. Looking forward to seeing you, Calvin, tomorrow at the REI Masters Edmonton Real Estate Investing Bus Tour and everyone else. We hope you guys have a great weekend and we'll see you guys all on Monday.
Bye.
thank you guys.
Thanks for listening. Want to be coached personally by Wayne and Gabby? Then you should join the Real Estate Investing Masters Mentorship Program. Details are in the show notes to get started.